Hello, neighbors, and welcome back to the neighborhood. I am Squealer D, and I am back again. And I hope you have your coffee, neighbors, today. Mine is right to the top and spilling out, but that is how I like it, guys. Very, very full, so I can enjoy every hot sip. I also steam my milk extra hot because you can't feel it on the outside of this wondrous, pretentious cup because it's double layered. But inside is a double shot of espresso and steamed, what do I use today? Cashew milk. Yes. And a little bit of sugar free creamer. It's so good, guys. You got to make your own espresso at home instead of spending money on Starbucks, guys. Because Starbucks takes money away that you could invest, my friends. So today we are going to be reading a article by Rick Wayman, and it is reviewed by Kadia Cartet and fact-checked by Kimberly. So look, guys, they got more women in there. It's just we haven't seen them yet. So this is called Earnings Guidance. Can it predict the future? And with all of the new AI and such, we see a lot of this, guys. Like, oh, this can tell the future. This can pick good stocks. So let us learn a little bit more about predicting the future. And then we will bop over to Yahoo Finance and look at the news. And we will also talk about paper trading on Investopedia, guys. So first, earnings guidance. Can it predict the future? It has become and if this is your guys' first time here, welcome. And go check out our playlist called Stock Market Learning. That has all of the videos that we've previously recorded and did live, and you can catch up. It'll be easy. Each one is under about an hour long is the longest one. Some of them are only 30 minutes, so it will be a quick catch up. So, it has become regular practice for companies to provide guidance along with the company's earnings. Guidance is a relatively new term that describes an old practice of predicting business expectations. Here, we'll take a look at this age-old tradition, discuss the good and bad points, and examine why some companies are saying no more to earnings guidance. The key takeaways: guidance is a company's public estimates of its current quarter and future earnings outlook. Earnings guidance is used by investors and analysts to adjust their expectations for a company's share price. Guidance figures can be missed, manipulated, or misunderstood, so they must be given their due diligence. To protect themselves from lawsuits, companies pair their guidance reports with disclosure statements, maintaining that their projections are by no means guaranteed. So, earnings guidance is defined as the comments management gives about what it expects its company will do in the future. These comments are also known as forward-looking statements because they focus on sales or earnings expectations in light of industry and macroeconomic trends. These comments are given so investors can use them to evaluate the company's earnings potential. An age-old tradition. Providing forecasts is one of the oldest professions. In previous incarnations, earnings guidance was called the whisper number. The only difference is that whisper numbers were given to selected analysts so they could warn their big clients. Fair disclosure laws, known as Regulation Fair Disclosure or Reg FD, made this illegal, and companies now have to broadcast their expectations to the world, giving all investors access to this information at the same time. This has been a good development. The good: more information is always better. Earnings guidance serves as an important role in the investment decision-making process. Under current regulations, it's the only legal way a company can communicate its expectations to the market. This perspective is important because management knows its business better than anyone else and has more information on which to base its expectations than any number of analysts. Consequently, the most efficient way to communicate management's information to the market is via guidance. In an ideal world, analysts who chose to listen to these numbers would use this information in combination with their own research to develop earnings forecasts. The bad: management can manipulate expectations. The cynical view is that because this is not an ideal world, management teams use guidance to sway investors. In bull markets, some companies have given optimistic forecasts when the market wants momentum stocks with fast-growing earnings per share. In bear markets, companies have tried to lower expectations so they could beat the number during earnings season. It is one of an analyst's jobs to evaluate management expectations and determine if these expectations are too optimistic or too low, which may be an attempt at setting an easier target. Unfortunately, this is something many analysts forgot to do during the dot-com bubble, or perhaps did not know how to do given the novelty of the internet and its applications at that point in history. So why some companies stop giving guidance? Claiming that guidance promotes the market's focus on the short term, some companies stop providing guidance in order to try to combat this obsession. However, eliminating guidance will not change the market's fixation on short term because the market's incentive policies cannot be dictated. However, everyone on Wall Street is paid annually and gets paid more if they outperform in that year. This focus will not change if companies don't talk to the street, and that's Wall Street. The ugly. Eliminating guidance could result in more diverse estimates and missed numbers. Analysts often use guidance as a reference point from which to build their forecasts. Without this anchor, the range of analyst estimates will be wider, producing larger variances from actual results. Misses of more than a penny may become commonplace. An interesting question is, what will Wall Street do if the misses become bigger and more frequent? Today, if a company misses the consensus estimate by a penny, its stocks could suffer or soar. Bigger misses could result in bigger swings in stock prices, producing a more volatile market. On the other hand, if the market's aware that the misses are caused by lack of guidance, it may become more forgiving. If there's an argument for stopping guidance, it is that the street would be more forgiving of companies that miss the census estimate. Bottom line, guidance has a role in the market because it provides information that can be used by investors to analyze the company, evaluate the management team, and create forecasts. Companies are foolish if they think they can alter the market's short-term focus. The street will still do what it wants, and it will stay focused on quarterly timelines. If, however, more companies opt for no guidance, the street inadvertently may become more rational and therefore stop whipsawing stock prices for minuscule variances and are really just swags, systematic, but we're all guessing. Wow, that guy called himself a swag. So, that is the article on guidance. And that is with any guidance, guys. Things, you've seen how it can be the good, the bad, and the ugly. And they can manipulate it. And that is the same with anything you purchase, guys. There's always the good, the bad, and the ugly. And that is why we are learning to read it all for ourselves. Guys, remember what I told you. If you come on over to Yahoo Finance and you click in a ticker, here's the Apple ticker. You can come in and see all of their insights they have. If you can even pay for Yahoo Finance's, I don't know, it looks into things deeper. It's like a deeper look. Company insights, corporate events, research reports, fair value, dividends. And this is the company insights. You pay for it, but it gives all of that insider sentiment, hiring trends, and that's all through Yahoo Finance. So they help you get that information, but you can actually find the information yourself. There's the charts. This is actually comments, and the comments, as funny as they are, guys, there are a lot of helpful comments. So hot coffee. So there's the statistics, and this is all free. Only the company insights is a paid thing. And also, you can look at if you get the Finance Plus, you can look at their annual, monthly, and you can download them. So there's more available if you pay the price, but for free there is a lot of stuff, guys. Their historical data is still here, even for free. Their profile, this is all of their, like, Mr. Timothy D. Cook, the CEO and director. It shows his pay. It shows his birthday. Well, his birth year. So look at all these older people. They're all born in the 60s, 61, 63, 64, 64, and 67. And these are their 1, 2, 3, 4, 5 top people, right? And look how much they make. Timothy Cook in 1 year made $16 million, guys. And you have to remember, like, people are like, well, $16 million, that's not that much. $5 million, that's not that much. Guys, how much do they invest, though? If you look at, like, high dividend companies, high dividend stocks, you can live off of just the stock alone, guys, off the dividends alone. For instance, 9 high dividend stocks. What's the highest one? We'll just look and see what they're saying. The highest, find a dividend paying stock. Okay. Where are they? Masabi Trust, dividend yield, 27.84%. So, let me bust out my little handy-dandy calculator. If you put $100, you would have a $27 yield. Is that what they're saying? They say you can. Tomorrow we'll talk about dividend stocks, guys, so we can see how much. Because, like, Warren Buffett dividends. Because Warren Buffett, based on Berkshire's 400 million shares, it gets $736 million in dividends annually. And that's just from one stock. What's KO, guys? What is the ticker for KO? Oh, the Coca-Cola Company. So on the Coca-Cola Company, their dividends, where's the dividend for dividend, ex-dividend? So Warren Buffett makes $736 million a year off of his stocks of Coca-Cola by dividends, guys. So by the end of 89, would be paid off in roughly 2 years solely from the current dividend payment. It's a miracle of compounding in action. So if Berkshire Hathaway could make $736 million off of dividends, why is our retirement funds all failing? Why is our Social Security failing? If money can make this much money, somebody has to be embezzling Social Security for it to be going away, because money makes money. So why is our Social Security losing money and not making money? This guy would have in 2 years paid off these shares. So you could use Social Security to buy Coca-Cola shares, use the dividends to increase Social Security, but we don't do that, guys, because instead they would rather borrow from our Social Security for the government and not make money off of it. And it makes you also wonder, why doesn't Berkshire Hathaway invest more in Coca-Cola or double invest, like invest in Coca-Cola and Pepsi? I mean, he has $88 million that is not put in. But anyway, they have their historical data, guys. They have even a profile right here. And they tell you a little bit about it. Here's their description. Corporate governance, how they govern. And then they have financials. You can look at their financial statement. Their total revenue. That's crazy. These guys' total revenue make $43 million a year. And Berkshire Hathaway made $737 million off of them. That's kind of crazy, right? So Tax effect. Total unusual items, $1 million. Expenses, $30 million. Interest income, $449,000. Isn't that interesting that Warren Buffett has 400 million shares and makes $736 million in dividends annually, but the company itself, its total revenue and gross profit was only $25 million. Wow. So Warren Buffett makes more off of his shares of Coca-Cola than the company actually makes itself. Is that what they're telling us? Each year, total revenue, operating income, 12,000, tax provision, 200, pre-tax income, 11. So after all their expenses and stuff, they're telling me that their net income, interest income, net interest income, that's crazy. That is crazy. What's this? Coca-Cola Consolidated. What does that mean? What's Coca-Cola Consolidated? This is on NASDAQ. Company. No, summary. That wasn't a good summary. Profile. I don't know what this is. This is the non-alcoholic beverages. What was the other one? How many Coca-Cola ones are there? So maybe financials. Let's look here. This one made $6 million. So maybe altogether they made more. What else is there? The Hershey Company. So the Coca-Cola Company. Coca-Cola. This is the Euro-Pacific Partners. And then what is FEMSA? These are all different companies. What's FEMSA? Let's look at their profile. This is non-alcoholic too. Where is this from? Another country? Mexico City. So this must be the Coca-Cola down in Mexico. 100,000 employees. What did they make? Look at their financials. There we go. That's the bigger revenue. I wasn't even looking at the right one because here's Coca-Cola FEMSA, and they made $226 million. So we're thinking that this KO one, let's see, KO was which one? Coca-Cola NASDAQ. Where is this one at? Profile. What do they say? This is in Atlanta. It's got 82,000. James Robert Quincy. Okay, what was the other one? I don't remember now. Yeah. So they don't make still, even with the Mexico one, they still don't make as much as old Berkshire Hathaway. So that is earnings guidance, and that is how to look up things on Yahoo News, guys. Yahoo Finance, sorry. Not news, finance. Let's check out the news, though, and then we will look at, let's close this, and then we will look at our portfolio on Investopedia Simulator, guys. This is a paper trader, and you get to pretend buy different stocks. Okay. Make sure everything's running good, guys. Sometimes we have technical difficulties. It's looking good. Looking good. So, what's up now? In the news. U.S. economy keeps showing more signs of strength and weakness. You guys, please remember that these are the articles they tell us to get you to continue to spend. U.S. now faces a very, very different inflation wave. Greedflation comes when companies use the excuse of higher input costs to hike prices, but are really profit-led. Well, duh. All these companies are doing this to us. Amazon opens second headquarters. What it means for the company. Yeah, just keep opening up Amazons, guys. Bring all the plastic over to America so we could have microplastics in our lungs. keep buying all that great dollar store China stuff that we don't even know if it is safe. The plastics could have cancer-causing agents in it. We don't know if it's safe. We don't care. Buy it. Get it from Wish. Get it from Temu. As long as it's cheap, get it. Cash trap and move into bonds. Money market funds and move into bonds. Yeah. Okay, JP. But really, if JP Morgan lies about something like this, like getting into bonds, they could fail, and JP Morgan's not trying to fail. They're gonna play by the rules. Elon Musk's decision to not pay rent on Twitter's offices is adding to commercial mortgage headaches at Goldman Sachs. Socks. Is it Sachs or Socks? Goldman Sachs. Either way, he doesn't pay his rent. You know what happens when people that don't have millions of dollars don't pay their rent, guys? Usually they have to go to court and pay even more. Goldman helped originate $1.7 billion loan, which owns many of Twitter offices. Colombia is suing Twitter, not paying more than $100,000. Imagine if you owed $100,000 in rent. Citing data from the Federal Deposit this week. Oh, no. Goldman Sachs. Bad commercial property loans. Oh, man. He hasn't paid his rent since November. Imagine if you didn't pay your rent since November. And what is up with Elon Musk? He sold all of his property and now he doesn't want to pay his rent? Like, who is he? What kind of person has that much money? Like, he takes a shot at Apple's payment monopoly. Well, what about his non-payment? How much money does Elon Musk have? Imagine being worth $235 billion and you can't pay your rent for $100,000. Imagine that. Imagine being worth $235.7 billion and you can't pay your rent on your business. Now imagine if a pizza place decided to be $100,000 behind on their rent, what would happen? Them and their pizza pie machine would get thrown out the door. But it's Elon Musk, guys, and he's going to go to Mars, guys, and he rides rockets, guys. He's cool. He's Elon Musk. He don't have to pay his rent. Man, the double standards in this country are disgusting. Look at him. Look at old Bill Gates. Got $116 billion. This is like a bad joke, guys. These people have hundreds of billions of dollars, and then there's news articles talking about they don't want to pay their rent. Oh, gosh. Oh, gosh. Twitter is being evicted from its Boulder office over unpaid rent. That's because he doesn't want to pay his rent. And think about this, guys. Twitter, he told people at Twitter that they would never have to go back to work. And now he wants them to go back to work. Everybody's being told that lie. And it's simply because of commercial property, guys. Watch. Type out. Watch the bad news about commercial property. I don't want to look at that. I want to just look at the news about it. I don't know. Bosses are fed up with remote work for 4 main reasons. Some of them are undeniable. I'm going to promise you guys, bosses are fed up with remote work because the people above them, they are having corporate issues. Guys, the corporate property needs to be paid for. You got to go back to work because the corporate real estate is worth over $1 trillion. They're going to fail right now. Yep, that's right. Oh, no. A Goldman partner sexually explicit video led to millions in settlement. Several $1 million to a woman to resolve a complaint so sensitive it was handled at the highest levels. Why? And then he still works for Goldman Sachs and still makes millions of dollars. Why? accidentally included a sexually explicit recording of himself as part of a work-related video sent to a junior staffer. He didn't do that shit on accident. Yeah, right. He accidentally sent an explicit recording as part of a work-related video. That's a lie. He did that. He did it on purpose, guys. There's no way that a millionaire sent a picture of himself naked on accident. It did not happen. I promise you that did not happen. That was on purpose. This guy's a weirdo. Look at him. He looks like a weirdo. Why did he do that? To take advantage of that woman and abuse her. Adam Dell. And he's a billionaire, a brother of billionaire Michael Dell. Didn't realize the camera filmed beyond the work project and unknowingly sent the entire video while working remotely. Yeah, right. So he just kept on going. He sent a normal video and then he started doing sexual things and kept filming. Get out of here. If she were traumatized, she could have just stopped watching it. Really? That's what they tell people that get raped, guys. Well, you could have just closed your legs. Why didn't you just close your legs? Why are you victim blaming? She got sent something that is horrible. I would have lawyered up too. That guy was doing a power move. It had nothing to do with an accident. You don't accidentally send your genitals to people. You don't. You don't accidentally send sexual information to people. You just don't. That's crazy. He's 53 years old, and he sent it to a junior worker. I bet that junior worker was in her 20s, guys. He's 53 years old, and he's the brother of a billionaire, and he works at a high level in Goldman Sachs, whatever they're called. And you think this dude did that on accident? He accidentally sent some girl in her 20s or 30s a sexually explicit video. Not a picture, a video, guys. That's some sick. He a sick man. Sick. Too cheap to ignore. Wells Fargo sees compelling opportunity in these two stocks. Man, Goldman Sachs, all these older dudes, they need to stop it. This grossness. How many Americans actually retire with $1 million? I will put, what do we say, guys? 22 million people? How many you think? 10%. Have 1 million or more in savings. 10% of retired people. 10%. That means 10%, guys, means 10 people out of 100 will be able to retire right in America. 10 people out of 100. You really think you're going to be one of those 10 people? Probably not unless you start right now. Restaurant chain Cava raises $318 million in IPO. Tesla chief Musk sees AI going mainstream. No more free returns. Man, remember when they were just giving stuff to people? You ordered something and then you didn't want it and they were just like, keep it because of Corona. Boy, has that changed, huh? IRS audits of the rich deliver huge bang for the buck. That's why they didn't want all those new employees at the IRS, because then they could do more audits. Don't hire new employees because then they'll audit us. Which is horrible for our country, guys. Major China cloud players want NVIDIA's chips. Tesla rival Xpeng launches self-driving tech in China. Fentanyl fuels ongoing U.S. drug problem. The retirement tax break, they'll pay you an annual income. The stock rally will end soon. Recession will hit and the Fed won't hike interest rates again. Jeremy Siegel predicts. Well, I agree with the stock market boom won't last. I think that we're already in a mild recession and it's going to get worse. And I think that the feds will raise interest rates higher, but they're going to pause and do it in about 2 months. Nikola stock soars. Okay, well, I don't even know. Biggest winners and losers from the Fed rate hike pause. People win and lose. $0.1 million in cash, $880K in a 401K, several pensions, and Social Security. Should I retire now? Well, you should definitely not have $1.1 million in cash. Why? Why do you have $1.1 million in liquid cash? Why isn't that cash making... Okay, here's the problem with America, guys. We have the majority of people that don't have money to work for them. And then we have a bunch of people that have money to work for them and they don't have it working for them. Why would you be 60 years old? Let's see if this guy said to get your money into something that's making money for you, because I can't understand at 60 years old why you would have $1.1 million in cash. You got a 401k, I understand that, but like, bruh, that $1.1 million in cash, even in a simple security or a simple savings account, could be making you 5%. That's crazy. That's crazy. You know what 5% of $1 million is? What? $5,000? Or is it $50,000? Let's see. I strongly encourage you to do a significant amount of research if you plan to do this by yourself. Okay, but what about his money? Are you going to tell him about his money? We round your savings $2 million. That's a 2% withdrawal rate. Most planners would tell you it's very conservative, and you should leave you feeling pretty confident. But this guy's going to just, none of what I said directly, but that's because the answer I give you incomplete. Okay, well, he didn't say it, but let me say it. Get that $1.1 million working for you. That's what you need to worry about first. $1.1 million. That can be making you money right now as you speak. And you're only 60. Let's say you wait till 70 to retire because you don't want to be bored. That gives you 10 more years for this $1 million to make money off of it. And you have Social Security to live off of. And I'm not telling you to risk it. I'm telling you to invest it maybe in bonds, something that you can get out of and get into and be safe. You already have a 401k that's growing. It's going to grow upon itself. But this $1.1 million in cash, that's ignorant. You'd be better to invest this in real estate. And I think real estate is going down. I don't think that having $1.1 million in cash is a good idea. I think you're wasting your time, your effort, and your life. Like, $1.1 million in cash could make you another $1 million before you die. Money makes money, guys. And the more money you have, the more money you can make. If you start out with, if he had $1,000 in cash, I wouldn't say that to him. He better save that $1,000 in case something happens. He needs an emergency fund, right? But $1 million, guys. Nobody should have $1 million in cash just sitting around. That's why it's so crazy that Warren Buffett has $88 billion in cash sitting around. It's really weird. And it's not weird. It just shows where our country's at money-wise. Things are not stable, and people think we're not in a recession and we're not in a depression and everything's going good. But then why does Elon Musk not pay his rent? And why does Berkshire Hathaway have $88 billion in cash? If everything's going just fine, why are things so weird? How to find out if you're part of the American middle class. I don't think that there is a part of American middle class anymore. I think that they took it from us, guys. They killed the American middle class. Okay. Saudi Arabia sought to push oil prices higher. Markets had other ideas. What's Kava? Stock market. Let's see what Kava is. Oh, look, it's right there for us. Trending tickers, Kava. Let's see what they are. Where's their company stuff? Profile. It's in Washington, D.C. Oh, industry restaurants. Owns and operates a chain of Mediterranean restaurants. The company offers salads, dips, spreads, toppings, and dressings. Oh, I didn't know about Kava. Kava. Well, why is it going crazy? You know? What happened? Oh, it's like Chipotle? Where's it? Is it brand new? Is Kava brand new? Never even heard of Kava. Is Kava new? Oh, it's not new. It's been around for 12 years. Stock priced as shares in the restaurant chain are set to begin. Oh, that's why they're new to to the stock exchange. Is Kava owned by Chipotle? No. Is it owned by McDonald's? No. Oh, Zoe's Kitchen. It's just a Mediterranean category. There it is. I never saw a Kava before. Where are Kava? Massachusetts, Missouri, New Jersey, New York, Alabama. Where else? Arizona, Arkansas, California. Man, they got a lot in California. Colorado, Connecticut, Delaware, D.C., Florida. What about Washington? We don't like Mediterranean stuff here? Who was that? Georgia, Kansas, Louisiana, Maryland, Massachusetts, Missouri, New Jersey, New York, North Carolina, Oklahoma, Pennsylvania, Rhode Island, South Carolina, Tennessee, Texas. Man, what about Sugarland. Texas got some neat names in it, huh? Water Slide, Turtle Creek, Town and Country. This is the name of them. I thought that was the town. Gosh, Virginia. Who else? Camp Washington. Short Pump. Swift Creek. That's it, guys. No Washington. No Northwest. Just California. No Oregon. No Washington. No Idaho. No Montana. I guess that the Pacific Northwest doesn't like Mediterranean yet. They better hope. I guess, people like certain fast food, and here in the Pacific Northwest, they're still stuck on teriyaki. When they get tired of teriyaki, maybe they'll move on to Mediterranean fast casual restaurant brands that bring hearth, health, and humanity to food. Who says that? We're a brand that bring heart, health, and humanity to food. What kind of humanity do they bring to food? Asking $22 per share. Okay, that's great. This is great. Kava. I never heard of Kava. Imagine that. So, I think that is it for the news today. Not the rise of the robots. We already saw that. Can I guard my assets from nursing homes? We're 65, have $1 million saved, and $42K in Social Security. Can I live on $90K per year? Bruh, can you live on $90K per year? I could live on like $4K per year. That's crazy. I wonder where they live if they own a home. Where do these people live? Where do you want to live on $90K a year? Terry, where do you live? Maybe they live in like a little trailer, They already paid their monies. They didn't say where they lived. Because you could definitely do it off $90K. Like, that's really, if you already paid for your home or you own a small trailer, your land is already paid for. People got to start being more frugal. Time to exit cash trap. $500 million. Imagine if your pops had $500 million. And then, oh, no wonder he cut him off. He's a grown kid, and he was not even his. It was a cheat baby. He was a baby of cheating. With a net worth of $450 million, Arnold Schwarzenegger cuts off financial support of his son. Children of famous people do not always live the glamorous life of their parents. Joseph Bania, why isn't he a Schwarzenegger? It certainly wasn't because he couldn't afford to support him. He said he has his reasons. I bet his reason was because Mildred Bania became pregnant with Schwarzenegger's son Joseph while Star was married to Maria Shriver. It wasn't until 2011 that Joseph learned who his father was, when his grandmother told him. OMG. So that's sad. And then he got cut off. I guess if you didn't even know he was your dad until 2011, it's only been 12 years. So that guy was a grown man, and he's only been supporting him for 12 years, right? So who cares? I mean, that's deadbeat dad stuff. He cut his son from financial support after 12 years of supporting him. He figured, okay, guys, that's first grade through 12th grade. We did it. Bruh, you need to pay for that kid at least for 18 years. That's crappy. If my parents ever cut me off and they had $1 billion, I wouldn't talk to them no more. My parents cut me off and they didn't have $1. That's crazy. After testing double the retirement tax break, they'll pay you. You got to be careful for these ads. Can a nursing home take our IRA? Probably. I think that's it for the news, guys. Further job cuts. Reduce costs by $1 billion. That's because they have AIs now, guys. Target stock was trending higher. Raised its dividend. They'll pay a dividend of $1.10 a share. TGT. Let's pop over here and look at it. So if you go into trade, guys, what was it? TGT, Target. Target Corp. Oh, that's not what I meant. Click on that one. Okay, so here is Target Corp. They're $136. Click into just looking at different charts. So you can purchase it. This is, like I said, guys, this is just paper trading, so it's not really trading. You can look at our portfolio and what we have. Right now we have some Apple. We have one Apple, and since we bought it, it's went up $12. We have 10 Bud Lights, which is Anheuser-Busch. And since we've owned Anheuser-Busch, it's went up $15. And this is Eat, which is Brinker International. What's that? Chili's? I can't remember. Is it Chili's, Brinker? Yeah, Chili's and Maggiano's. And we have 10 of those, and that has went down $31 since we bought it. And we can We could just go in and sell these, go to trade. Nope, that's not how you do it. You go to your portfolio, and then you go to it, and you can go to sell like that. And then if we want to sell our 10, we can do it at a market and see what we get. Here we go, $36. Submit your order, and now it will sell it. It takes a few minutes, though. This is all paper trading. It's fake trading. You can go open up your Investopedia simulator, and it will allow you to practice. This is Occidental Petroleum. This is what Berkshire Hathaway, and this is Fisker. I don't know why I always look at Fisker. It's low. It's only $18. I don't know why, but it's always like on the top. So it just happens to get bought when we're doing like examples. There's no reason that I have these certain ones. But you can go to any one, and like here's Berkshire Hathaway's index. In order to buy a Berkshire Hathaway, it costs $519,000. Are you serious? That's wild. Look at it. What's their 5-year? Man, it's crazy. Just go up, 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 up. Plus 900, plus 1.94%. Such a big number. It's like crypto. What do they have? This is KO. This is Coca-Cola Company. And when you come in here, you can also see all their fundamental data. So if you need additional information than what you could find on Yahoo, you can come into the Investopedia simulator and you can learn here. There are a bunch of different places you can get information. There's different charts, and there's a learning section where it teaches you many things that we've already learned. It's in our trading. It's called Stock Market Learning, guys. Stock Market Learning. That's the folder. Go check it out. I think that this is it for today. We are going to call it a day. I will see you guys tomorrow. Yes, Friday. Same time, same place. Be there or be square, neighbors. I hope you have a great day. And I will see you tomorrow.